GameStop. The name conjures images of childhood trips to the mall, the latest video games, and the joy of a new console. But behind the nostalgic facade lies a company grappling with a rapidly changing industry. GameStop, once a retail giant, found itself struggling to stay afloat as gaming shifted increasingly towards digital downloads. Its stores, once bustling with eager gamers, seemed to be fading into relics of a bygone era. The company's financial reports painted a bleak picture. Sales were plummeting, losses were mounting, the stock price was in a freefall. Wall Street analysts, the prophets of profit, issued dire warnings. GameStop, they proclaimed, was on the verge of collapse. Short sellers, sensing blood in the water, piled on, betting heavily against the struggling company. It seemed like the game was over for GameStop. But then, something extraordinary happened. A community of day traders, armed with smartphones and fueled by social media, decided to fight back. They congregated on Reddit, specifically on a forum called WallStreetBets, challenging the narrative of the financial elite. They saw value in GameStop, not necessarily as a business, but as a symbol of defiance against a system they believed was rigged against them. What started as a whisper in the depths of the internet quickly turned into a roar. The message was clear: buy GameStop, hold GameStop, squeeze the short sellers. The stock, left for dead by Wall Street, suddenly sprang back to life, soaring to unimaginable heights. The financial world watched in astonishment as a group of amateur investors, coordinating online, took on Wall Street and won, at least for a while. At the heart of this unprecedented movement was a mysterious figure known as Roaring Kitty, later revealed to be Keith Gill, a former financial educator at MassMutual. Gill, a self-proclaimed value investor, had been bullish on GameStop for months, sharing his research and insights on YouTube and Reddit. He passionately believed that the company was undervalued and that its turnaround potential had been overlooked by Wall Street. Gill's videos were not the polished presentations of Wall Street analysts. They were raw, authentic, and filled with a contagious enthusiasm that resonated with retail investors. He spoke their language, shared their frustrations, and challenged the conventional wisdom of the financial establishment. He became a folk hero, a symbol of the little guy taking on the Goliaths of Wall Street. As GameStop's stock began its meteoric rise, Gill's profile exploded. His YouTube channel, Roaring Kitty, gained millions of subscribers. His Reddit posts garnered thousands of comments. He became the unlikely face of the GameStop saga, a reluctant leader of a movement that was shaking the very foundations of the financial markets. Gill's influence on the GameStop phenomenon cannot be overstated. He provided the intellectual ammunition for the movement, the research and analysis that gave credence to the idea that GameStop was undervalued. But more importantly, he provided the emotional spark, the rallying cry that united millions of retail investors around a common cause. GameStop's improbable rise ignited a firestorm in the financial markets. It was no longer just about GameStop. It was about AMC, BlackBerry, Bed Bath & Beyond, and a host of other struggling companies that suddenly found themselves swept up in a wave of speculative frenzy. The era of meme stocks had arrived. These companies, often with questionable fundamentals and bleak futures, became the darlings of retail investors. They were no longer judged on traditional metrics like earnings or revenue growth, but on their potential to go viral, to become the next GameStop, to stick it to the hedge funds. Social media platforms like Reddit, Twitter, and Discord became the new trading floors, buzzing with tips, rumors, and calls to action. This new era of investing, fueled by social media and driven by FOMO, fear of missing out, posed a significant challenge to the traditional gatekeepers of Wall Street. Hedge funds, accustomed to dictating market movements, found themselves outsmarted and outmaneuvered by a decentralized army of retail investors. The rules of the game had changed, and no one was quite sure what the new rules were. The meme stock mania exposed the growing rift between Wall Street and Main Street, between the institutions and the individuals. It highlighted the democratizing power of technology, giving ordinary people access to financial markets and a voice that could move those markets. But it also raised serious questions about market manipulation, the gamification of investing, and the potential for widespread losses. As the dust began to settle, the impact of the GameStop saga was undeniably profound. The financial markets were left reeling, grappling with the implications of what had just occurred. Regulators scrambled to make sense of the events, contemplating new rules to prevent similar episodes in the future. Meanwhile, the traditional financial institutions were forced to reconsider their strategies, acknowledging that the landscape of investing had been altered irrevocably. The GameStop episode had not only disrupted the market, it had sparked a broader debate about fairness and transparency in the financial system. As these discussions unfolded, one thing became clear: the world of finance would never be the same again. The story of GameStop was more than just a tale of a stock's rise and fall. It was a narrative about power, influence, and the shifting dynamics within the global financial markets.